What if I told you that a tiny penny stock trading around $0.52 is quietly building AI-powered systems that could be used in security, surveillance, and automation? And almost nobody is paying attention. This isn't just another cheap stock. Because behind the scenes, this company is making a very unusual transition. From something ordinary into something that could be part of the AI revolution. Now I know what you're thinking, another penny stock hype video. But here's the thing, this company didn't start as an AI business. In fact, it used to operate in a completely different industry. We're talking about physical security services like guards, cash handling, and logistics. Nothing exciting and nothing tech-related, but then something changed. Instead of staying in a slow-growing business, this company started pivoting. Not into just any industry, but into AI and robotics. They began developing AI-powered robots for security, autonomous patrol systems, and smart retail automation. They also worked on facial recognition and monitoring systems. And suddenly, this wasn't just a boring security company anymore. It was becoming an AI-driven automation business. And here's where things start getting interesting. Because most companies talk about AI, but very few actually try to integrate it into physical real-world systems. This company is attempting to bridge that gap. Think about the difference between software AI and physical AI. One exists on screens while the other exists in the real world, interacting with people and environments. And that second category is where massive future demand could come from. Imagine a world where security isn't dependent on human limitations. No fatigue, no distractions, no human error. Just continuous monitoring powered by intelligent machines. That's the vision being built here. Now picture large facilities like airports and warehouses. These places require constant surveillance and huge manpower. Replacing even a portion of that with AI systems could reduce costs significantly, and that's exactly where the opportunity lies. If companies start adopting these systems at scale, the demand could grow rapidly. And early players in this space could benefit the most. But before we go further, let's slow down for a second. Because in the stock market, story alone is never enough. Execution is everything. And that's where things can either go right or completely fall apart. So the big question is, can this company actually deliver on what it's trying to build? Because transitioning from a traditional business into an AI-focused company is not easy. It requires capital, technology, and strong leadership. And not every company manages to survive that kind of transformation. Some fail halfway, some burn cash without results, and some simply disappear. But sometimes a company manages to pull it off. And when that happens, the upside can be massive, especially when the starting point is a low-price stock. Now let's build a scenario. Imagine this company starts securing contracts with malls or logistics hubs. Small deployments at first, then gradually scaling up. Each new contract adds validation. Each deployment builds credibility, and slowly the market starts noticing. That's usually how these stories begin. Quiet moves followed by sudden attention, and once momentum starts, it can accelerate quickly. Now here's where things get really interesting. Because we haven't even talked about the stock itself in detail yet. And this is the part most people are waiting for. So what's the name of this company? The one attempting to shift from traditional security into AI-driven automation. It's Guardforce AI with the ticker GFAI, a small-cap stock trading under $1 and currently around 52 cents. A company that most people have never heard of but is trying to enter a massive trend. Now let's break down why investors are starting to watch this. First, the AI narrative. Anything connected to AI right now gets attention very quickly. Markets move on themes, and AI is one of the strongest themes in the world today. So when a small company positions itself in that space, it naturally attracts curiosity. Second, real-world application. This isn't just another software company. This is about physical AI systems that can be deployed in real environments. That gives it a different angle compared to typical AI stocks. It's not just code, it's machines operating in the real world. Third, the price factor. At around 52 cents, the barrier to entry feels low for retail investors. And psychologically, that matters more than most people realize. Because when a stock is cheap, people imagine bigger percentage gains. Even small upward moves can look very attractive. Now let's talk about potential upside. If this company manages to expand its AI segment and increase revenue, the market could start revaluing it. And when small-cap stocks show real growth, they don't move slowly. They can jump aggressively within short periods of time. We've seen similar patterns before. Stocks going from $0.52 to $1 and sometimes even beyond that. But it's important to stay realistic, because for every success story there are many failures. And that's something you should never ignore. So let's discuss the risks clearly. This is still a high-risk speculative stock. The company is in transition, and that means uncertainty. Revenue consistency is still a question. Profitability is not guaranteed. And competition in AI is extremely intense. Large tech companies with massive resources are also working on similar technologies. And competing against them is not easy. Then comes execution risk. Building technology is one thing, scaling it successfully is another. If the company fails to deliver real results, the market can lose confidence quickly. And when that happens, the stock price can drop just as fast as it rises. Now let's talk about market psychology. Because penny stocks don't move only on fundamentals. They move on sentiment. Hype plays a role. News plays a role. Narratives play a role. And right now, AI is dominating all three. So when a small company like Guardforce AI enters this narrative, it naturally gains attention. And attention in the market often leads to volatility. That volatility is what attracts traders. Fast moves in short time frames. Opportunities, but also risks. So the real question becomes, what kind of investor are you? Are you someone looking for long-term potential or short-term momentum? Because strategies matter. And understanding the nature of the stock matters even more. If you're looking at this as a long-term play, then execution and growth will be key factors. If you're looking short-term, then news and sentiment will drive movement. Either way, awareness is important. Because going in blindly is where most people lose money. So here's the bottom line. Guardforce AI, ticker GFAI, is a high-risk, high-reward type of stock. It sits at the intersection of a powerful trend and an uncertain execution path. And that combination creates both opportunity and danger. If the company manages to execute and scale its AI vision, the upside could be significant. But if it fails to deliver, it remains just another struggling penny stock. That's the reality. No guarantees, only probabilities. If you want more breakdowns like this and want to discover hidden penny stocks before they get mainstream attention, subscribe right now. Because the next opportunity might already be forming and you don't want to miss it.